What do you predict the price of Tesla shares will be in 2030? With the market turbulence surrounding Elon Musk's Twitter acquisition last year, Tesla arguably had one of its hardest years ever. However, as of right now, things appear to be moving along smoothly once more, raising questions about how much Tesla stock will be worth by the end of the decade. In mid May, Tesla shares reached a high of 217.65, far higher than the year to date low of 100. This year, the company has recovered and joined the global stock surge. Following several rejections from the $208 resistance, the company released what most analysts consider to be solid profitability numbers for 2022, which gave the rally more traction. The price of Tesla's shares had a significant decline in April 2023, hitting a low of $152, and it has since begun to rise. Since Tesla stock is presently trading at 221.31 cents per share, experts are speculating on how much higher the company stock could rise to by 2030. In a CNBC Squawk Box episode, Ron Barron, the head of Barron Capital, predicted that Tesla's stock could reach $1 million. Barron stated during the meeting that he was not worried about market volatility, particularly given the present levels of customer demand for Tesla vehicles. Barron believes that the demand for Tesla is currently at all-time highs. Barron said that he anticipates the business's stock price to rise in the years to come. Tesla is currently Barron's largest stake, with demand for his cars reaching previous operative levels. The company accounts for around 30 of BP's portfolio. When we began investing in Barron's company in 2014, he stated that they were producing 31,000 automobiles annually and that he anticipated 20 million cars by 2030. By 2030, I envision $1,500 per share, especially with $5.7 billion in managed assets. The Barron's Mutual Fund has benefited greatly from Tesla's recent exponential growth. According to Morningstar, the fund has returned roughly 26.5% on an annualized basis over the last 5 years on Tesla's stock and 20.9% over the last 10 years. The results make the fund the best performing U.S. equity fund over the long term. I don't really have any concerns about the stock market. Regarding his faith in Tesla, Barron continued, "I don't worry about the market or the economy." Barron pointed out that Tesla has been dubbed the safest vehicle ever produced, and he anticipates the automaker releasing a more affordable model, which he believes would increase the company's value by 7 to 10 times in the future. Barron is unquestionably optimistic about Elon Musk's businesses overall, especially throughout the extremely volatile stock market of the previous year. Although there's no way to predict what will happen to Tesla's share prices in the coming weeks and months, it's hard to deny that Barron has made some wise decisions in the past. As for whether the price of Tesla stock could reach $1,500 by 2030, no one knows for sure yet. An affordable mass market EV be a crucial element of that journey in the years to come. Meanwhile, ARK Invest CEO Cathie Wood believes that the stock will be over $3,000 by 2030. Barron disclosed that one of his largest purchases of the year included approximately $100 in private investments, with SpaceX and approximately $200 million going toward a specific satellite. Indeed, some believe that Tesla stock might reach a minimum of $2,000 by 2027, making it one of the most significant investment possibilities of our time. Wood anticipates that Tesla's fully autonomous FSD beta would eventually enable a fleet of robotic taxis, pointing out that the autonomy business will be a major factor in her $2,000 projected value estimate for the stock, which is $500 more than Wood's prior estimate. In a June 2018 letter, Wood and ARK Invest projected that the revenue generated by Tesla's robotic taxis might reach $8 to $10 trillion by 2030, with a target of $1,500 by 2026. With a total holdings percentage of 9.4 in the flagship ARK Innovation ETF ARK, Tesla has maintained its position as one of the largest holdings in ARK. In addition to the ETF's expected value of $2,000 per share, Wood also shared a bull case price target of $2,500 and a bear case price target of $1,400. According to the firm's prediction, in 2027, Tesla's robot taxi service is predicted to generate 67 of the company's expected enterprise value and 64 of its expected EBITDA. Furthermore, it anticipates Tesla's AVs to generate 40% revenue in the same year, but at significantly lower margins than robotaxi. Income from Tesla's automobiles, including present and future models with FSD capabilities. With every vehicle it sells, the firm is effectively increasing the potential for robotaxis. In addition, as the system grows and improves thanks to more FSD beta testers, the company plans to eventually deploy a sizable fleet of autonomous vehicles. Because of this forecast, Wood and ARK are quite optimistic about Tesla and the likelihood of a robo-taxi industry. We want Tesla to scale its unit. Wood said that each one now presents a potential for a robo-taxi and robo-taxi fleet. We think that it's very smart to maximize units. However, some people think that Tesla stock is overpriced and may see more downside in the coming months, according to recent Tesla news. CEO Elon Musk first mentioned in 2016 and would also advised Tesla to scale autonomy in recent statements about a potential robo-taxi business. Popular rating agency Moody's recently upgraded the Tesla bonds to investor grade status. A few months earlier, CP also upgraded the credit rating of Tesla from BB plus to triple B. These developments indicate that Tesla stock is headed toward becoming a blue chip, as the company is currently leading the world in the manufacturing of electric vehicles. Elon Musk also cautioned the shareholders about the weakening global economy, saying that Tesla is not due to a weakness in the global economy. Production and delivery have skyrocketed as a result of Tesla, the largest database maker, expanding its gigafactories in Berlin and Texas. Due to an increase in production and a spike in demand, the company delivered 450 automobiles in the fourth quarter of 2022. The most significant Tesla news came from the company's fourth quarter and full year results, which were released in a statement. The company stated that its revenue increased to $21.45 billion, above the $13.75 billion, and that its profit increased to $1.19 per share, above the median analyst estimates of $13. Most of these numbers, as expected, came from its automotive business, which made over $21.3 billion. However, the company's first quarter financials weren't that impressive, even though it met most analyst expectations. Tesla's net income decreased by 24 from the previous year, which has caused a sell-off in the company's stock price, which is currently trading near its 3-month high. Cuts differ based on the average model's region. The company announced a 5.2% and 4.3% discount on the Model S all-wheel drive and Plaid models, respectively, in March 2023. Additionally, Tesla slashed prices in China for the second time, dropping the price of the Model 3 by 13.5% to 229,900 yuan, and the Model Y by 10% to 259,900 yuan. By mid-March, 169,515 new Tesla cars had been registered, according to figures from China Merchants Bank. This puts the business on track to establish a record for sales in China, having already achieved one in the previous quarter. Following the news, Tesla stock is up 11 as investors anticipate a robust quarter. Additionally, Tesla's recent price reductions in many markets have prompted rivals to take comparable action. Its Chinese rival recently revealed price in the second largest economy. Cuts it is impossible to predict with any certainty what may happen to Tesla stock. But with autonomy development quickly gaining traction in the auto industry, it's not long before it enters the market more significantly. And Kathy Woods certainly thinks it's a worthwhile market to get a jump on subscribe for more foreign music. Overall, Tesla is a highly divisive company. On the one hand, there are Tesla bulls like Kathy Wood who believe the company will do well and thrive in the future. On the other side, there are analysts and investors like Scott Kilmer and Bill Miller, who believe the promised future of EVs is only a mirage.